You know David S. Rose as the father of angel investing in New York and the founder and CEO of Gus.com. But what many people don't know is that he's also a real estate developer who's built skyscrapers across the city and been honored by the real estate industry at the same banquet as Donald Trump. There's a story there somewhere for sure. Now David's bringing liquidity to investors in commercial real estate through USREM, which stands for U.S. Real Estate Market. You can meet him in person at the NYC FinTech Connect event on February 27th, but you can hear him give a preview right now. I'm David Hemingway, and this is an Angel Nest First Look, where we explore the people and the technologies that are transforming business and our world. It's a pleasure to welcome back David S. Rose, who has founded or funded over 100 companies and mentored thousands of startups, maybe millions, through his best-selling books. David is now bringing liquidity to the commercial real estate industry with the U.S. real estate market. He's appearing at a Witham-sponsored NYC FinTech Connect event here in New York on February 27th, and you can reserve your seat by using the link on our website at theangelnest.com. David S. Rose, thanks for visiting us again. It's a pleasure to see you.
It's my pleasure.
Tell us about USREM.
So USREM, the U.S. real estate market, is a very interesting play because the world's largest asset class is real estate. If you think about it, every single person in the world lives somewhere and works somewhere. And so real estate is this very, very large asset class. But what makes it different from other kinds of things is it's very, very long term. You put up a building and that building has a physical life of 100 years or more. It's got an economic life for a mortgage of 20 or 30 years. So when you invest in real estate, it's typically a long-term investment. And therefore, over time, the way that these are financed has been long-term financing. You get a long-term mortgage on a property, and then the equity investors who are putting in the equity cash in the property are in it for the long term as well. So the way most of these real estate properties are financed is the developer or the sponsor who's acquiring a property goes out and finds a property and then gets a mortgage on it. And typically you can get about 65% of the value of the property in a long-term mortgage. You're renting the money because they know it's not going anywhere and it's a physical building. And so that building is there. But then you got to come up, if you're the sponsor or the developer, with the other 35%, and that's equity from somebody, cash out of your pocket. Or what typically happens is the sponsor puts in some of their own cash, typically 10% of that, and then goes out and finds the rest of the money from other investors who want to invest in real estate. They're called limited partners typically, and they will be putting in, 20, 30, 35% of the value of the property in equity as their investment. And then when the property is ultimately sold, the mortgage gets paid off and the balance of the cash from the sale is split among the limited partners and the general partner. And because of this, it's a long-term play. And so anybody who's investing in real estate is going in for the long term. These are typically forecast on a 5, 7, 10, 12-year basis. And your money goes in. You get paid every quarter or annually from the cash flow of the property. So you get a cash on cash return. But the big money comes when the property is eventually sold in 5, 7, 10, 12 years, and you get back your original investment plus the appreciated value of the property. And so a lot of money has been made in real estate because this could be a very long-term, solid investment, both cash flowing and appreciating over time. There's only one challenge, because while everybody goes in knowing that it's a long-term investment and you're investing for that decade-long thing, in the real world, sometimes life happens. And life happens means you're getting divorced, or you're dying, or you have a sudden capital call from somewhere else, and you say, whoops, I really need cash. And where do I get it? You look around and you have this big chunk that's sitting in this real estate investment. And so as a limited partner, you go to the general partner, the GP, and you say, hey, David, I know it was a long-term investment, but I really need the cash because I'm getting divorced and I got to do this. So can you please buy me out? At which point the general partner says, I empathize, but no, that's not the way it works. This was a long-term investment, and no, I can't buy you out. And so ultimately, if the LP makes enough of a stink and the GP doesn't like to antagonize their LPs, the GP will finally say, okay, listen, if you can find somebody to buy your position and step into your shoes, not my thing, but okay, I don't have to allow it, but I will allow it. So then you have a random person with a random piece of a random property that can't be resold, trying to find somebody to buy it. And the answer is there's nobody to buy it. There are secondary funds. If you have, when you own $1 zillion that, you own the bank, if you have $100 million portfolio, there are secondary funds that'll come in and make an offer to buy that from you. If you have a smaller LP piece in a small building, not a chance anybody's going to buy that from you.
And I'm
And
presuming that it's also hard to get a good price at that stage.
I mean, well, not only is it hard to get a good price, the going price, even if you have a big property that somebody would buy, a big LP piece, you're talking about 30 or 40 or 50% discounts off of the actual net asset value. It's an enormous haircut because it can't be resold and there's no market for it and so on and so forth, right? And so this has been something that has bedeviled the industry for almost a century at this point. This is how all real estate is financed. There is a liquidity challenge, and in periods when the market is moving and people get into liquidity crunches, they need to get cash and they can't get out. And so there is no answer. So for the first time, what we're doing here is actually creating an answer. And so we came up with this idea and we started talking to all the major real estate players. As you mentioned, my background, although many people know me as an angel investor and entrepreneur, my background is actually in real estate. I've got an MBA in real estate from Columbia. My family this year celebrates their 100th anniversary in real estate. So
Amazing.
we've been around. So I basically know everybody in real estate. So we started calling around all the major players and said, hey, here's the idea. And they said, that's great. Let's create something to solve that problem. And so the US real estate market works with these general partners, these developers and sponsors who have properties. And we work with them and we say, hey, if you just want to list your property effectively on this platform, that means there will always be a place for your LPs, your limited partners, to offer their pieces with your permission for sale. And it gives a place for somebody else who wants to allocate into real estate, and they wouldn't have been able to get into your fund in the first place because if they weren't there at the beginning, but now they can come in on a secondary basis and acquire somebody else's piece. And it's a real marketplace. And so that's what we spun up. USREM now has been live since the beginning of this year. We're actually closing our first transactions. We've got close to $1 billion in property listed on the platform, all kinds of interesting things across the full range of real estate, from multifamily apartments to student housing to single tenant, triple net leased office space. And it's really, really exciting because for the first time, it's bringing liquidity to this hitherto giant but illiquid asset class.
Well, and liquidity is key, right, David? Because it allows people to make other investments.
Absolutely.
Maybe attracts people who otherwise wouldn't want to participate. And as you say, provides welcome relief when life happens.
Right. Absolutely. That's the whole goal. So, and we think this has the potential to be the next really major financial market, because this market of secondary real estate sales for individual LPs does not exist. And what we've seen, we knew when we spun this up that it would be great for existing limited partners because they have no other option at all right now. And this would provide a vehicle for them to go liquid. And so that was a no-brainer for them. We figured it would be really interesting to people who were looking to invest in real estate, but either didn't have access to these funds or properties when they started, or who would like to potentially bargain for less than the NAV because they're buying from a secondary player. And so we figured that would be a no-brainer too, and it is. The question we had was, would the GPs, the general partners, the real estate sponsors, be interested in doing this? And so we tested the market, and I was blown away. In my 50 plus years of business, I have never seen a product market fit like this. We are being approached literally on a daily basis by sponsors who have fascinating properties, and they say, hey, this lets me do something for my LPs. And it turns out that there are multiple studies that show that the difference between having a property that can be resold and one that can't in real estate, that's called the liquidity premium. And the liquidity premium is between 12 and 22%, with an average of 16%, which means that simply by making their property potentially resaleable by their LPs, they've increased the value significantly of the property for them and for their LPs. So they love it too. So far, it's a win-win-win. Win for the buyers, win for the sellers, win for the GPs. And we are delighted to be launching this now and growing.
That's amazing. You can hear more from David S. Rose at the Witham-sponsored NYC FinTech Connect event. That happens in Times Square on February 27th. There's a link on our website at theangelnest.com where you could register. David, before you go, what was it like to be honored in the same banquet as Donald Trump?
Oh, it was a piece of work. This was back in 1989 when I was back in real estate full time at those days. He was the builder of the year, and I was outstanding builder from the New York Building and Owners and Managers Association. And even then, he was walking around, hi, I mean, very, very Donald Trump-ish at that point. But he's a very interesting guy, shall we say.
Maybe you could help with some of the real estate concerns of the U.S. government. I don't know if you have
Well,
any.
right now, we've heard that they're canceling some of the federal leases, which is very interesting. And the real estate industry is looking to see what's going to happen with the federal government. But that hand hasn't been played out yet, but we'll see.
Boy, they were always the steadiest of customers, right? All right, David, we'll see you on February 27th. Thanks so much.
My pleasure.
This has been an Angel Nest First Look. I'm David Hemingway. We produced the Angel Nest with help from Rob Higley. Thanks for tuning in. We'll see you next time.